assets and types of assets, liabilities and types of liabilities, and let us know about the comparison of assets and liabilities, and at last we will come to the conclusion. Assets, the valuable things owned by the business. These are the properties owned by the business. So there are three types of assets. They are current assets, are also known as short-term assets, fixed assets, or it is also known as long-term assets, and intangible assets. Let's learn about types of assets. Current assets are also known as short-term assets that are expected to convert cash within a fiscal year. For example, cash and equivalents, accounts receivable, prepaid expenses, raw materials, inventory, short-term investments. Fixed assets. These assets are acquired for a long term use in a business. Fixed assets is also known as the tangible assets. Example, land, buildings, factories, furniture, equipment. For example, if we need to start a small scale industry, we need a shop or something to do the business, and we need furniture for the employees, washroom for the employees. Then it's called fixed asset. It is less for more than money. Now, intangible assets. Intangible assets are those having no physical existence, like goodwill, patents, trademarks are the examples. Now let's go to the next. Liabilities. Liabilities are the obligations or debts payable by the enterprise in the future in the form of money or goods. Liabilities can be classified as fixed, current, and contingent liabilities. Examples of liabilities are bank data, mortgage data, money owned by the suppliers like accounts payable, wages owned, taxes. Next, types of assets. The types of liabilities. Fixed liability. This liability are payable generally after a long period, like capital loans, mortgage, etc. are its examples. Second one, current liabilities. Liabilities payable within a year are termed as current liabilities. The value of these liabilities goes unchanging, like creditors, bill payable, and outstanding expenses, etc. are current liabilities. Next, contingent liabilities. These are not real liabilities. Future events can only decide whether it's real liability or not. So, for example, loss sheet, loss sheet for these patents, know-how, change of government policies, change in economic, change in foreign exchange are the examples. And let's talk about the comparison of assets and liabilities. Meaning of assets and liabilities. Items that a company owns or has a right to use. Liabilities. Obligations that a business or individual need to pay in the future. Purpose. They help in generating revenue for a company. Liabilities. They are the financial obligations that the company needs to pay in the future. Types. There are two types in assets, fixed assets and current assets. Two types in liabilities. They are current liabilities and non-current liabilities. Examples for assets are machinery, lands, goodwill, accounts receivable. Examples for liabilities are accounts payable, loans, and more.
Depreciation.
Depreciation. Fixed assets are subject to depreciation. Liabilities are always non-depreciable. Now, calculating of assets and liabilities. To calculate assets, we need to take the liabilities plus owner's equity. For liability, we need to take the total asset minus owner's equity. Accounting in assets and liabilities. Increase in asset debited, decrease in assets credited. In liabilities, increase in liability credited, decrease in liabilities debited. Cash flow. Assets result in a flow into an inflow of cash and increase in cash balance. Liabilities results into outflow of cash and decreases cash balance. Now let's come to the balance sheet. Assets come on the right side of the balance sheet and the liabilities comes on the left side of the balance sheet. Now let's go to the conclusion. Conclusion. Both are part and parcel of business. Without creating assets, no business can be possible. At the same time, if the business doesn't take any liability, then it will not be able to generate any leverage for itself. If the assets of the business are appropriately utilized and liabilities are taken only to acquire more assets, the business will thrive. But that doesn't always happen because